May 18th. It is Victoria Day up here in Canada. So I hope you all are having an amazing day. Let's go ahead and talk about the SPY. What an amazing morning. We broke up above this 294 and we came up and we hit the high of 295.58. I do have a Fibonacci up on here, so looking for that potential pullback down to 291. Let's go ahead and get rid of those yellow lines right at the volume session, and we'll hide our pivots and our camarillas. Go ahead and pull it back a little bit. So when we talked on Friday, I did talk about the fact that we would be potentially breaking above the box that we have right here, where we have that consolidation, right? Let's get rid of this. Let's remove that. And you guys are going to be amazed with what we hit on the weekly chart. Really cool stuff. So I'm just going to go ahead and pull up my channels to see if I can answer any questions for you guys up here. So I do have my YouTube up if you guys have questions there as well. All right, so we have this box right here. Let me go ahead and make it a little bit darker. If you guys can see it, right here is the top of it. And we had a former high of 294.88. We broke that today. Now, what happened when we kept hitting these highs, right? This orange dotted line. We had higher than normal volume, higher than normal volume. Again, when we came down and touched the bottom, a bit higher than normal volume, and we sold off up here with a little bit more volume. That 292 right here, this dotted line right here, this acted as, excuse me, right here, this one acted, that's our 200 EMA, acted as a resistance in the past. Every time we came up to it, we closed below it. So we have gapped up above it. This is our 90 simple moving average that we are hitting right now, 294.68. An area where if we go back in the past and we look at where we sold off, it did act as resistance right here when we bounced up above, and then we sold off from it. So looking at that, let's look at it on the weekly chart as well. Hey, Andrew. Yeah, here on Ticker Talker TV today. So we've got this. Look at what we just hit. I know it's hard to see with these lines, guys, but we do have our 20 simple moving average. Look at where we hit to the T. We hit the 20 simple moving average. If you guys have ever heard of Bollinger Bands, the midline indicator, right? So we've had these 4 weeks here where we just sort of went sideways. We came up. You know, if we break above that, it could be a good indication that we're going to be going higher. If we have a nice close above that, and it could be, we could be breaking down from here as well. I really want to make that just a little bit darker for you guys, box, so you guys can see it a little bit better. There we go. Now you guys can see it.
Like the timer off.
So right here, we hit that 20 simple moving average. We've broken above the 21 EMA on the weekly, sort of in a limbo zone at the moment, right? We could easily pull back right here. We could pull back to these averages and continue to the upside and potentially test that 50 simple moving average on the weekly. When we go and we look at our daily chart, again, we do have that 200 simple moving average up here, right up at 299.42. Wouldn't be surprised to see that we might go ahead and test that. But at the same time, again, we would likely have a move down and then another move up. So if that does happen, right, then we could see that this is going to pull back potentially. Maybe we close down here near the moving averages. We are still in that bullish trend, right? We're up above those for the moment, and we might go on up and test up there. You know, we do have some earnings that are still going, and some big movements that are happening with larger names. I did have Tesla, I did have Microsoft and Apple that you guys know I always look at. So let's go ahead and pull them up, right? So we have Microsoft right here. And Microsoft, we had this wick up on Friday. When we actually go and we look at that, right? Let's go and look at it on a 5-minute chart. We'll scroll back here. Did we even really trade up there? No, that was just like a crazy trade, right? So we didn't hit it up here. We didn't hit it here or here. So we have a bit of a downward trend at the moment right here. Let's go ahead and do this. Do our little trend line right here. Okay, if we go ahead and we see this volume coming in, we might see a big move. Came up and it tested up there, immediately pulled back. But we're pretty much following that trend line for today. I was just about actually in pattern recognition in the training pit. If you guys want to learn more about the dark pools, hey, Bat Scientist, missed you yesterday. Then we will see if this can go ahead and come on up and come up to that 187. You know that SPY and Microsoft and Apple. Apple's number one, excuse me, Apple's number 2. Microsoft is number 1 for the holdings for QQQ and the SPY. So for the moment, looks like there could be that potential retraction of the indexes and then back on up to that 295, 296 level, maybe even 299, and then potentially on down. We did see, I've got these on my list today. I had CCL. I did have my buddy Keith talking about ACB. He's like, is this going to be like Tilray? Is it going to run like crazy? Well, today it did go better than expected. We had it down here for 14 for CCL today. And you can see right off the bat, came down, tested it, and it went right on up. It's been a bullish trade for sure on CCL. ACB as well. Nice. Yes, it is to the upside today. So we had ACB all the way up to 1968 today. Had that entry, if it does break that 1490, which it did, even pre-market, that was our high right here. It came, tested it pre-market, and then right off the bat, right at 940. Again, a nice trade up there. It's okay if you miss it. Hey, look, there was another opportunity. You could have gotten back in and wrote it up that $5 trade. Now it's in that downward motion, testing the 50 simple moving average on our 5-minute chart. Delta Airlines. We were talking about the airlines all day yesterday on my Sunday broadcast on YouTube, right? Everyone's saying, Jane, why'd you pick Delta? Well, Berkshire Hathaway, Warren Buffett, he dumped all of his Delta. Why? Because back in 2001 with September 11, it took roughly 6 years for these to rebound. So are these going to all of a sudden overnight come back? In my opinion, no. You could potentially have day trades to them, right? It is definitely possible. I had this one for breakout above 2120, right? So right here, hey, if we broke out above 2120, is there a trade? Yes. The first half an hour, a bit of a move to the upside, but then it came back. And you guys really need to watch that 50 and 200 simple moving average on the 5-minute chart. It's a great chart. Let's also talk about Disney. I didn't have it on my list today, but I have been talking about it for consolidation as well. Looks like we might have a move back, a retracement a little bit for Disney. Oh, let's see, it doesn't want to remove. Hold on. Did I just remove all my indicators? Yes, I did. I just wanted to remove the drawing. So Disney, we had this box. I was talking about it. I've talked about it for the past 2 weeks, saying, hey, we've had this box and it's consolidating right here. So do we want to wait and see where it's going to go from here? Well, sure enough, today we went ahead and we broke above it, right? We broke above that box, ran up pre-market, and now it looks sort of in between a little channel right here. We've got right here to right here. Right? So it's a bit of a downward channel. We just broke below our 50 simple moving average. We could be coming back down. It could come back down to test this area right here of 113.81. What really caught my eye was I was looking at the SPY on the weekly chart. Again, I mentioned that 90 simple moving average on the SPY. Look at what we hit for Disney, right? We hit the 90 simple moving average, 117. We also hit up here. We almost hit this green one, the 161. But when we go to our weekly chart, we hit that 20 simple moving average as well. And this green dotted line, or excuse me, green cross 161 as well. And look at what happened last time that it tested that and it sold off from there. Where did we go? We went all the way down to 80. So if we're not able to go ahead and close this week up above 117.60, I am feeling bearish on Disney. I'm feeling bearish on Disney to come back and test this area right here if we don't even go down and close below that. I mean, we could have a really big bearish engulfing candle. I know people are probably saying, Jane, why are you saying that this is going to go down lower when we just gapped above that consolidation box? This could be a big test right here to see how many buyers there are if we're able to keep that momentum going up. Hey, if we're able to go ahead and keep that momentum up and we don't close below the top of this box, then I'm bearish. But right now we're selling off on an average that it couldn't hold back here back in February 24th, came down. It had a little bit of buying power there. And we've just closed above, we're testing that 200 simple moving average on the weekly. If we close below that 113.53, which is where we were pre-market, that was that level I said that we might retrace to today. If we do not go ahead and close above that, I'm feeling bearish on Disney based on the technicals. You know, hey, they might have opened up, their occupancy might be good, but looking at the chart, it's come up, it's hit a level, and we're starting to see sell off there. Hi, Arky. Got all my regulars here. Thanks, guys, for joining us. And everything today seems to be in the upward motion, right? We've got Netflix, no, Peloton. So let's look at Peloton, right? Let's go to our daily chart. We had that massive upward move of Peloton. I did close my charts earlier, so 56.90 was my resistance level for today. And let's go back, 15-minute chart here. And bearish below 46.90, correction, bullish above 50. So again, first 15 minutes could have been a great bear trade for you guys. I was teaching this morning from 11 to 12, so definitely missed that move myself right here. But I did jump in on that Disney short, so that's why I wanted to go ahead and share that with you guys. It is on one of my trades on the ticker Tocker. So you can see here, hey, we might come down, we might find support down here at 44.22. All right. So a great move. You know, if you guys want this list, it is a newsletter on Ticker Tocker, and it's super, super affordable. You know, if you had gone ahead and shorted 100 shares, so maybe you have $4,800 in your account, right? With some margin, then look at that. You've made $400 right there. Low risk, waiting for these levels to break down and go ahead and be able to profit. So definitely check them out. Zoom as well. So Zoom, bearish below 168 today. All right, 168. You can see right here it tested. We had this 50 simple moving average. It broke down below, came down. Look at that. You see that pink dotted line right there, 164.37. Great target. Again, a nice, if you'd had 10 shares even of this, you could have made nice $40 patiently with low risk. So that's the name of it, is definitely finding that risk trade. If you have a smaller account, it is possible to go ahead and trade these large cap stocks. You don't have to take such of a large position size, but you will be able to go ahead and make a trade with lower risk, right? I did do a steady trade interview this past week, and we were talking about penny stocks for people to start off with versus large caps. Bottom line is paper trade until you're comfortable, right? Find the strategy that works best for you. I learned with penny stocks in the beginning, it was not a strategy that worked for me. The larger caps smaller position size, large range work better for me because you have that low risk, right? And it's all about risk mitigation for trading. So let's look at Boeing. So Boeing, again, on my bullish above levels here to break out above. And yes, we did, right? Right away, 127, broke above, running on up to 133 up here. Nice $6 move to the upside. Now, overall, this could be bear traps that are happening today. I mean, I mentioned it before. We had it last week, in my opinion. Bear traps for those big guys to go ahead and get in on the majors, to go ahead and sell their positions. We didn't talk about Apple today, so let's go ahead and look at Apple. So Apple, we are coming back up to our high of last week, right? So looking at it, we would need it to really break that 116 level. It's a bit of a head and shoulders here, right? You guys see that on our 15-minute chart, a shoulder, head, and shoulder test, and then down we went. Well, now we're testing it coming back to the upside, right? Are we going to be able to go ahead and that scientist, you know, if you're looking at Disney for potential options, I would look at it as, hey, it could potentially go to that 113 area, you know, today, in my opinion. If we break down and we break down below here, we could be going down to seeing this. I would look for potential test of this box, in my opinion, for this week. We are in a downward trend at the moment, and when it breaks downwards and we have higher than normal volume, like we had higher than normal volume come in right here on this candlestick when it tested the top of that downward channel. So that could be some selling power going in right there. I did not check yet because I was teaching earlier today. There might have been a print that came in. You can see we also had a couple candles that happened here, right, in a row. These are 15 minutes. So we had selling here, 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 and here. So for 1, 2, 3, 4, 5, 6 candles, so that would be hour and a half, 90 minutes, that it was not able to break that 117 level. Then we get into the middle of the day right here, where the algos are really in control. Maybe they took out some stops, and then it broke right back down again. So for 90 minutes, all that volume, it was never able to go ahead and break above that level. Really quick jump above and right back down again. So looking at that resistance area on this chart for today of 117.08 as potential stop area, but liking it to the downside to go ahead and potentially fill that gap to the downside. Many times we will see that the gaps do get filled. And when we were looking at it on the weekly, you saw that that 200 is right here at 113.53. So looking for that to be tested as well. If that's broken, then back down to the top of the box at the 109 area. All right. And look at Netflix as well. And we'll look at the Qs as well. If you guys have questions, you guys can also put it up. Don't know if we have time to get to everybody's, as we are limited on time today, not like on Sundays, right? So, oops, I'm in the drawing tool. All right, so break down below 44.90. For whatever reason, I did my levels this morning. Oops, let me go over here. Stuck on that draw mode. All right, so settings, 456. Right, and let's look at it on our 15-minute chart. So 456.80 right up here at the top, and a low for potential short of 449 right here at that 50 simple moving average. So again, we broke that right in the first 15 minutes, had a massive run down. You guys see, like, look at these EMAs. They perform time and time again. EMAs, SMAs. These computers are programmed to buy and sell off of these levels, right? So that's why I have black and white charts, is because I don't need to know exactly how the program is written. I just aim for certain targets, right? So I know, hey, in the past, it's bounced off of this green cross line, right? Bounced up. So potentially, hey, look, we came up here. There was even more selling power. Pay attention to the volume, guys, right? If you guys want to learn more about trading around the dark pool, come and check it out. We had an amazing one that came to us from a print, right? We see these prints and we see the moves that follow. We had one that happened on Snap. That's a big one, right? Let's look at our daily chart. We had a nice big gap up. Would you have thought that it was necessarily going to have a massive gap up today? Probably not, but we saw the prints. We knew that something was coming, right? So definitely come and check us out at thedarkpools.com if you guys want to learn about that. Do you all have any questions that I can answer? Mike or Zach, do we have any questions? On your end? Not this moment? Okay, cool. Anyone else from my YouTube? Do you guys have any questions? Let's also look at the Qs, right? Because the Qs have been the strongest leader so far. And look at that, we are testing up here. A little bit of a cup and handle, right? I mean, if we want to go bullish, we have our cup and then a little bit of a handle right here, right? So if we wanted to go crazy, deep target in 53 days, if we add it, this is our channel right here, 280 roughly for 281 for the Qs. If it were to continue in this bullish trend and we don't have a big downturn that follows. Right now, you want to look at the candlesticks at the end of the day. You're going to get the best viewpoint for the end of the day for a swing trade, right? Because you have the most data. They can do anything they want to. Right now, we're up here today, but they could close it back down here at the 4 EMA by the end of the day. So you don't know where, there's no guarantees in trading, right? But if you have that most data possible, if you're going into a swing trade, it can be much more profitable. Right now, we're a bit away from the moving averages. Every time we've had that, look, it came back down, right? Up here, it came back down. And as it goes up, it's never straight shot up or straight shot down. The upward moves have been faster lately because we do have higher than normal short interest. So you guys know, or short volume, excuse me. You guys know I do track it, and I've gone ahead. I'm going to put it here, and I'm going to enlarge it for you so you guys can see. So for May 4th through May 8th, we had 61% for the SPY, 55 for the Qs, 58 for the Russell, 55 for Dow Jones, DIA. And then you look and you see, okay, well, Apple was at 45%. So people were actually shorting the indexes, but they were more confident to go long in the stock. Same thing with Microsoft. So Microsoft has not been heavily shorted except for back in April, the end of April back here. So looking at Amazon too, just recently, this past week, there was more of an interest in shorting Amazon. We broke above 50%. I keep saying interest, but I'm sorry, it's volume. It's the short volume. So it's reported the day end to FINRA as opposed to short interest that is actually 2 weeks late. So I do excuse myself for saying that. Tesla, people have been starting to get more bullish on Tesla as well. Facebook, we're starting to see a bit more of the shorting happening there. However, it is lower this past week than the week before. Gold and GDX, that whole gold sector, I need to add silver on here. That's what I need to do. I'm going to go ahead and do that too. And then Boeing. Boeing can tend to drag down. it was a big interest in the Dow Jones, but it's no longer as heavily weighted because it has dropped so much in price. TVIX, people have been more bullish on it, yet on VXX, people are starting to short that one more. So there's a little bit of a divergence. So it's really cool to see this divergence happen when you start to say, okay, well, people are feeling like these stocks are going to go up more, and so they're buying more into it. However, there are people that are shorting the indexes, right? They're thinking, hey, this is going to go down, so they might continue to short it. And then you might have that short squeeze that will happen and continue with those quick upward days because of the shorts being forced to cover. So I hope that helps you guys to see the overall viewpoint of the market. We'd also talked about AG. Threw that in there on Sunday for you, Bat Scientist, saying, hey, this one's a potential long. Look at that nice gap up that we had today. So unfortunately, we were not able to get it, or I wasn't able to get into it, but it performed just as expected, right? It came up, it tested the 200 simple moving average, and now it's pulling back. The exact same motion that this is having today of pulling back for another maybe potential entry is what could potentially happen with Disney and also with Microsoft and Apple. All right, guys, thank you all for coming and joining me today. I will see you all on Friday at 12:45 as well. If you have any questions, you guys can always reach me at jane@cjanetrade.com. And if you guys want to see anything else in particular covered, just put it in the comments. Thanks so much and have a great week ahead.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Top of the morning to you.
Who is this? Ben Arnold.
Pip,
Pip, Pip?
by the British pound.
By the British pound?
Oh, by Jove.
What is happening?
Avoid those traders with a trusted Tocker trading leader today.
Stephen Kalajian is the chief market strategist and co-founder at Tocker. Steve, great to have you here. Walk me through how you're approaching markets right now after we've had this big run up off the lows. Seems like we're hitting some resistance over the last couple trading days.
Good morning, Oliver, and thank you for having me. Yes, the market took a significant rally here, 30% off the lows. We saw the market run into a significant overhead resistance above on the S&P futures above the 2860, hit the 2870 level twice. And we saw on Friday, and actually yesterday, it was touching a little bit. I was actually hoping for a 2900 print. We never got that. But again, I was more or less indicating to all my users and my subscribers that this was pretty much of a short-term top in the market, and I was looking for a pretty decent pullback, and we saw that in the last day and a half.
What do you think here? Do you do a cause and effect? Are you a Y type of guy, Stephen, or is this just saying there was a drawdown needed and there wasn't enough to justify the run? I mean, is there a cause and effect you see? Is it crude? Is it what? Was there anything that we can tie to the stoppage of this rally?
I think it's a couple of things. One, I think crude definitely dampened the market in a way that really put a halt on the rally. But also, we were getting we went from a very, very extreme oversold condition to a very, very extreme overbought condition on the daily and weekly charts, which I'm looking for lower prices in the weeks ahead.
How low? We've had a lot of this conversation about retesting the lows. When we first started to bounce, there were a lot of people that said, you know what, this isn't going to last. We got to go right back down to 22. And then the market just kept on cruising. We also heard the case from many technicians who looked back at 2008 and 2001 and said, hey, this takes a while. It could be months until we go back and retest. What do you think? Is there a big move coming, or do we need to just go neutral for a little bit and catch our breath?
I think it's a combination of both. I think we need to take a pause here and look and be a little bit neutral, but I am looking for lower prices. Looking at the weekly charts on the again on the Nasdaq 100 and on the S&P 500, there are gaps below the market that I do believe will be filled before we trend higher, and that could mean a retest of the lows. So basically, not really bullish here at these levels, and I do believe that we ran pretty quickly off the lows, and that was from a lot of stimulus that was added to the overall projections in the economy. But again, it's going to take a long time for confidence to come back and corporate earnings to come back as well. So again, with the high pressure, with the lack of demand for crude oil, and that's really hurting a lot of the stocks in the S&P 500. So more or less, I think that we're going to start seeing some declines here in the weeks ahead. Again, I think we rallied way too fast off the lows, and I think it's time to get a pullback here, maybe even a higher low or even a test of the low in the weeks or months ahead.
Stephen, can you give our viewers an idea how you're structuring this type of view? How are you expressing it? We still have a VIX that this morning is up again. We're at 46, so options aren't cheap. I know that many have right now become frustrated because if you don't hit your move pretty quick, you've got a good degree of decay as this VIX has kept dropping. So do you own puts? Are you looking at more range-bound type of trades, condors? Can you walk me through kind of what makes sense to you?
Yeah, well, basically, I'm known for more day trading type in the equities, ETFs, and the index futures and the commodities markets. Every day there's opportunities all day long. So we're just more or less in and out all day long trading the markets. But I do look at long-term, intermediate and long-term charts. And I have a couple of charts here on the spiders and the Qs on the weekly charts. And, there are a pretty big gap below the market on the Qs and on the spiders that I think will get filled before we go back up again. And again, that's going to take some time. Again, we can drift lower, or it could be, in a couple of weeks, we can hit those levels and then get a sharp bounce. So it's either going to be a V or a U is what I'm looking at.
So walk me through the NASDAQ. When you look at Qs right now, we've been talking a lot about this. Clear outperformer. I mean, the NASDAQ by some definition just looks like it's still trending higher. And the collapse that we saw, as severe as it was, bounced so strong on the back of some of these stay-at-home trades and others. What to you looks like a reasonable level for the NASDAQ to get down to as part of this pause in the move?
Well, Amazon is really leading the march here. So the print low on Amazon was 1626, and I don't think we're going to go anywhere near that. When Amazon announced that we're going to employ 100,000 new people to work based upon what was going on in the world, I told everybody the number one stock to own was Amazon, and I think Amazon rallied about 500 points, 600 points off of that level, 1,800. I think we hit 24.44 yesterday. I do think that's a stock to buy on any type of weakness, not here, but somewhere around the 1,900, 2,000 level. But I do think that the NASDAQ is outperforming. We have come pretty significant, not as much as where the S&P has come, but more or less, again, when the markets pull back, I do believe they're all going to, more or less coincide with each other. And I do believe that I think the print low on the Qs was around the 174, 177, something like that. I wouldn't be surprised if we even, get down to those levels or just slightly above it. But there are gaps on the weekly charts that I really believe will get filled before we can base out and then eventually head higher.
Okay. For oil right now, it's been wild. Are you in oil, or is this a commodity that is no longer to be trusted, Stephen? I mean, yesterday was a pretty wild session, and now today, June contracts got blasted at the open as well. I guess people are afraid there's going to be another game of hot potato at the end of this month.
Well, in my August 1st, I'll be trading for over 37 years. And I actually took a snapshot. Never thought in my wildest dreams in 37 years would I see negative 40.32 on oil, and I actually took a snapshot of it. But there is a high, there is such, there's no really demand. I drive to work every day, and there's literally maybe 7 or 8 cars on the highway. I don't really see any activity with people staying home. There's just a glut of oil, and we don't position oil. We trade it intraday. Again, a lot of opportunities in the June contract now. So, as far as what we're looking for, could oil test 810? Absolutely. There's such a glut of oil on the June contract. Could it go lower? Possibly. Do I see negative for June? No, I don't see negative for June like we saw in May yesterday. But again, to see what we saw yesterday in 37 years, negative 40.32 was the first for me and for many others that have been trading for such a long time.
Yeah, no doubt about it. Right now, $15 almost for the June contract today. Stephen Kalajian, appreciate you walking us through what you're looking at right now in markets. Looking for pullback here in NASDAQ and S&Ps. Stephen is the chief market strategist and co-founder at Ticker Tocker.
Using trade ideas in Ticker Tocker is a quick and easy way to get trade recommendations from our network of trading leaders. From the homepage of the application, go to the left panel and you'll notice that there are 2 options of trade ideas: chart and text ideas, and verified trades. These are the 2 different types of trade ideas that you can get in our platform. Chart and text ideas include charts that you can load, or text ideas that you can get easy recommendations from, similar to a stock twit or to a tweet. For the trade ideas that you are not subscribed to, you'll notice that a free trial or paid option is available to subscribe to get access to that premium content. You can always see which trade ideas you're subscribed to already by clicking on subscribe. Verified trades are another type of trade idea, and in the grid you can see the performance record of the various trade ideas that leaders are offering. For more details on these performance offerings, you can go to a leader's profile by clicking on the button next to their name. And then from here, you can actually see an in-depth review when you go to the verified trades tab of their profile of exactly how well they have done trading based on our verified performance results. And you can download a report if you want to see exactly how their statistics were. Then after you subscribe to a leader's trade ideas, if you want to then view them in the platform, you can go ahead and go to the menu and go to the button that says trade ideas, at which point the trade ideas will pop open here on the left panel, at which point you can then filter them by just ideas. This will be the chart and text-based ideas. You can filter them instead to show you your verified trades by clicking on trades, of which you can always copy trades to your existing broker account by clicking on the copy button. And as well, from the leaders portion of the platform, if they're sharing charts, you click on the charts button, at which point you'll notice a load button that would allow you to load the exact same chart as what the leader had shared. And that is how you use the trade ideas functionality in Ticker Tocker. In Ticker Tocker, accessing trade ideas is available through a variety of different places within the mobile application. Going to a leader's profile enables you to see their verified trades and other types of trade ideas, such as chart and text ideas. Going to a leader's profile is as easy as clicking on their profile name, and then when on their profile, scrolling down to the location on their profile where it says products, and then trade ideas. At which point, if you are not already subscribed to a leader, you will need to subscribe in order to see their trade ideas. After you have subscribed to a leader's trade ideas, you can see the full list of the trade ideas that you have subscribed to under the trade ideas portion of the platform. The trade ideas portion of the platform allows you to filter these ideas by text ideas, by verified trades, by ideas given to you with charts, and also by the ideas that are just done by you. You are able to filter the list of ideas by symbol in order to see all ideas relevant to the symbols that you have selected, and you also have the capability to filter the ideas by leader as well. If you want to see these ideas on the chart that you're looking at the same time, you can turn your phone at which point you will be able to see the ideas both on the left panel as well as through green and red icons indicating trades that are going both long and short here on the chart. Then by clicking on these long and short ideas, you will be taken to those trades here on the left panel. You also have the capability, when looking at the trade ideas on the left panel, to be able to click on a particular trade idea, and then by clicking on that particular trade idea, you will be taken to the corresponding part of the chart where that trade idea was referenced. And that is how you can access the trade ideas functionality in the TickerTalker mobile application. A layout can be a collection of custom indicators, custom drawing styles, annotations, signals, and more available in an interface that is able to be loaded right within the TickerTalker charting platform. In order to load a layout in TickerTalker, a user must click on the Layouts tab on the left panel. Once on the Layouts tab, a user can find the various layouts offered by the leaders on the platform, and they can sort them by recent, popular, and subscribed. And then you can click on the button that says Apply this layout. When you click on the button that says Apply this layout, the layout will start to load on the chart that is open on your screen. A user can also go to a leader's profile on TickerTalker and access their layouts through a tab called Layouts in order to see all of the layouts that that leader has uploaded to their profile. And again, by clicking on Subscribe and Apply, they are able to apply that layout to their charts. When the layout is finished loading, you will be able to see information that is presented from the layout, including any of the custom indicators, drawings, colors, and more available right on the chart in TickerTalker with the various data subscriptions that you already have from the exchanges in TickerTalker. The layout I have loaded here is the Adhara AI Predictor, but if you wanted to load another layout, you could go to the left panel, you could go to Settings, and in the second way you could find a layout, you could click on Load Layout, at which point you would be able to find a layout from one of the other leaders in TickerTalker. Notice how as I scroll through the list, layouts that I have already subscribed to have a load button, and new layouts that I am subscribing to have a subscribe button. And that is an overview of the layout functionality in the TickerTalker platform.
The TickerTalker app brings the powerful trading technology tools of the TickerTalker desktop platform into the hands of its users who are on the go. TickerTalker connects novice and advanced traders with industry leaders who are providing real-time trading content throughout market hours every single day. The TickerTalker app allows traders to follow and get real-time push notifications of trading leaders' trade ideas, all while on the go. TickerTalker leaders host interactive live trading rooms which provide all-day coverage of their trading ideas and methods seamlessly with social chat for real-time feedback from the expert community of TickerTalker's powerful user base. Set up and/or subscribe to automated trading strategies to mimic the decisions made by trusted professionals automatically. Powering up your trading AI has never been this easy. We focus on intuitive trading efficiency so you can focus on what matters most in your life. The world's most powerful trading technology is now in the palm of your hands.
Placing verified trades in TickerTalker allows you as a leader to have a verified performance report that gives transparency to your followers of exactly how well they could have done potentially if they were following and copying your trades. To place a verified trade in the TickerTalker system, all a leader has to do is go to the top part of the platform where the menu icon is located, and then go to the trading part of the application and click on Order Entry. From the Order Entry panel, a leader has the capability to be able to place trades from either the simulator in the platform or a linked broker account, at which point by checking on the checkbox Share as a Verified Trade, a leader is able to place trades with a full range of order options and then have those trades be tracked through the verified trade system. As those trades are then placed, they will show up in the order book where a leader will be able to see all of the historical executions that they've received for their trades, both in real time and previously, as well as any errors or any additional criteria that may have happened when those trades were placed. The order book is filterable by broker account and simulator, by date range, and is also updated in real time. The final piece of the verified trade system is the real-time performance tracker, which allows a leader to be able to see in real time the real-time status of all their positions and how they're contributing to their performance. The performance tracker allows a leader to sort by different broker accounts that they've linked to the system, by open and closed positions, by automated trading strategies or verified trades. And all of these things are done within this performance tracker in a way where downside risk can be quickly eliminated by checking on and off different positions and then closing them out very, very quickly with the quick close select positions buttons. After a leader has placed verified trades and started generating them, they can then see those performance results and share them publicly through their profile. On a leader's profile, there are interactive calculators that allow users to evaluate what following that leader would have looked like. Opening up one of those calculators will show exactly how the performance would have been, as well as a breakdown of capital inflows and outflows into the account, as well as any changes to leverage that may have occurred. And finally, by clicking on the Download Performance Statistics button, an investor can take a look at a real breakdown of exactly which orders were placed by that leader and how they affected the performance of that leader at the end of their verified trade balance. So any capital inflows and outflows that may have occurred are also shown in this report, giving an investor a real overview as to exactly what capital inflows and outflows resulted in what was happening in that account. On a leader's profile, investors can see a chart of exactly how well that leader was doing over time, as well as the capital that was put at risk. And finally, if a leader wants to go ahead and change in their account any of the account funding principles, so add or remove to their capital balances that I was showing you before, they can go into the broker account settings, click on manage, and then under the settings for each broker account or the simulator, they can add or remove capital to their tracked allocated verified trade balance by entering it in through the settings. Now, obviously, if you make higher returns with a lesser balance, so you make more money with less, your percentage will be higher. Whereas if you use more capital to generate the same returns, your percentage will be lower. And all of these things are tracked within the Ticker Tocker verified trade system.
Placing verified trades is available on our mobile application as well as if you are a leader in the Ticker Tocker platform. All you have to do to place verified trades on the Ticker Tocker mobile app is to go to Trade, then to choose either a limit or a market order, choose either a real money broker or a simulated broker account, and then to check off the box Share as a verified trade before placing the order. Then that trade will be placed as a verified trade in the system for everybody to see as well. Within the Ticker Tocker mobile application, all of the same calculators and charts are available to users for them to be able to evaluate your performance. They can view the account balance changes similar to how they are able to be seen on the desktop website. And as well, any of the reports, such as are on the desktop website, are available on the mobile application as well. When you're a leader in the mobile application, you are also able to manage the status of your orders through both the order book as well as through a real-time performance tracker. You can see the status of your available funds, realized and unrealized, and all of their positions. Very similar to how you'd be able to do it on the desktop application. And all this is done in real time through a native application available on the iOS App Store and the Google Play Store.
Hi, everyone. I'm Stephen Kalajian, Chief Market Strategist and co-founder of Ticker Tocker. I've been trading for over 36 years. My specialty is scalp and day trading the markets and also looking at longer-term trends in the market. Well, I'm here to talk about how to trade these chaotic markets. I've seen it all in the 36 years of trading. I was on the floor of the New York Stock Exchange during the '87 crash, and believe me, that was some day. And I remember that day I probably had about $50,000 to my name, and I bought 300 shares of General Electric, and I think I bought 300 shares of International Paper right near the lows of the day. But I really gained the confidence and understanding the volatility in the markets over the last 36 years. After that, We saw in 1998, we saw the long-term capital debacle where the Dow was down over 550 points from about 1 o'clock in the afternoon all the way to 3 o'clock, and then the next day it gapped up. So I saw the volatility, and that's when the markets had 8-point spreads, and there was really depth and size in the marketplace. And then during the financial crisis, well, 9/11, we saw the World Trade Center, and we saw what happened there. And we saw the Dow drop, all the way down. And that day, again, we saw significant volatility in the market. But again, how to trade these markets are important. Then we saw the 2008 financial crisis. And again, right then and there, we saw significant volatility. And then obviously with the coronavirus. So in the 36 years, I've seen volatility, but we haven't really seen volatility of this magnitude. I've seen flash crashes of 1,000 points down, but very short-lived and then snap right back up. But what we're seeing here now is almost unbelievable, 500 to 2,000. And yesterday we were down over 3,000 points just at one point. Never in my 36 years I ever think we would see the Dow down 3,000 points in one day, and we closed down 2997. Today we closed up over 1,000. So 1,000-point days are really like nothing. I remember during the days of me trading, I saw if the Dow moved up 30, 40, 50, 70 points in a day, it was monstrous. I used to go to bed by 7 o'clock at night. Now we're seeing moves that are just really unbelievable and unprecedented. And I really think that it's scaring a lot of people, whether you're day trading or if you're just investing your own money. The old adage is, oh, don't worry, it'll always come back, blah, blah, blah. But I don't talk this time. Doesn't mean that we can't go down to 14, 15,000 and then snap back up once this virus is contained and everybody starts getting a handle on it. And if a vaccine comes out, we don't know where the bottom is. In the financial crisis, we saw the Dow dip below 6,700. I think it was 6,600 and change before we rallied back up above 8,000 a few days later. Again, the most important thing here is how do you trade these markets? Well, in my 36 years, my point of view is to be able to take as much content and looking at the trades that we do all day long in my live room. And what I do all day long is I teach people how to trade these markets, to understand the trends, the reversal patterns, and the positive and negative divergences. So I'm here to help you. And I've been around. So I've been around for 36 years. And those dates that I told you, I lived through those dates. And we're living through these times now where we're seeing extreme volatility in the market. So again, come to my live room every single day. I'm teaching, I'm explaining the market direction, and I feel very confident that the ideas that we're calling in, all the big cap names, in the ETFs, in the index futures, are able to help you understand which way the markets are going and give you significant trading ideas. So come to my live room. I start from 8 to 4 every single day. I'm Stephen Kalajian. I hope to see you soon. I'm Chief Market Strategist and co-founder of Ticker Talker. Be there and I'll teach you, and let's calm down, and I'll teach you how to trade these markets the right way. Have a great night.
Good morning and welcome back to NASDAQ Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at MarketSite is Jonathan Kopnick. He's a Chief Technology Officer of F Creative Group, and we're going to be focusing on the state of the retail investor and the exclusive launch of Ticker Talker. Jonathan, thank you very much for joining me over at MarketSite. And before we get into the new platform, do you think retail investors will go the way of robo-advisory, or do you continue to see robust self-directed trading?
Well, I think that there's two things that you have to look at. The first thing is the rise of people losing confidence in investing themselves. If you look at how people look at the markets these days, a lot of people are intimidated by the fact that they see increasing amounts of people doing electronic trading through institutions, auto trading, things like that, without their ability to access it themselves, which is why we formed Ticker Talker in the first place.
All right, and why do you think passive investing has grown in popularity, and do you think that investors are too reliant on it?
I mean, I think they're absolutely too reliant on it. We've been in a low volatility environment for, the longest bull market of all time. As the Fed raises interest rates, as volatility starts to come back, you start to see that, in general, that people are going to have to start placing trades themselves. You can't just put money into the market and expect to make money every single year. That's not how it works. So in general, passive investing is easy, and things that are easy are, usually not something that lasts over the long term.
So what does the future of retail investing look like to you?
The future of retail investing is the same way that any other industry has been innovated, which is giving traditional retail investors the ability to compete with the big institutions, allowing them to do automatic trading without having to code, allowing them to find ideas and to trade intraday with any broker in any asset class very easily.
All right, let's go back to Ticker Talker. Tell us about the launch and what was it designed to tackle?
So there is a huge lack of efficiency in the market when it comes to retail investors. People are increasingly losing faith in their ability to trade themselves. And that comes from the fact that as institutions are becoming more and more sophisticated, traditional retail investors are not. So the goal of Ticker Talker is to empower the general at-home retail investor to be able to trade just like they're seeing in Flash Boys or in any other place like that, to be able to place automatic trades, to create a trading algorithm without having to code anything, to follow a global marketplace of the best trading leaders, find their ideas, and trade them themselves with their existing broker all in one place.
So with so many different platforms out there, what makes Ticker Talker unique?
Well, for starters, we have a patented codeless drag and drop algorithm creator. There are very few other platforms out there that allow somebody to place trades on an automatic basis, definitely not easily. And then secondarily is that our global marketplace of trading leaders allows somebody to come onto the platform to find ideas, auto-execute them themselves. And when they're doing that, it also allows them to, as they're looking at our platform, to do it in a way where it's easy, it's intuitive, it's not intimidating.
All right, and to wrap up, when is the debut of the platform?
So we're launching our beta launch in July, and the platform will be open for open registrations in September.
All right, well, thank you very much for joining us at MarketSite, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.
Hi, I'm Jeff Wecker, and I want to welcome you to my profile on Ticker Talker. I've been in this business now for about 25 years. I started out at the Chicago Board of Trade against some of the best in the world. You didn't learn quickly, they show you the door. The average trader studies charts 60 hours a week, pick the direction they think it's going to go. They enter the trade and start praying. I do things a little differently. On my profile, you'll be able to subscribe to 3 things. 1, my verified trades, which you'll find here. 2, my broadcasts, which I'll do every day. And number 3, you could enroll in my personal coaching program, which will teach you how I actually arrive at these trades. I want to teach people to not be part of that 85 to 90% to lose. I'm going to explain how that 80 to 95% work, and I'm going to give them the techniques and tools they need to always be on the opposite side of it. To learn how to become a successful Forex trader, follow me on my profile on Ticker Talker.
Top of the morning to you.
Who is this?
Ben Arnold.
Pip.
Pip, Pip?
By the British pound.
By the British pound?
Oh, by Jove.
What is happening?
Avoid those traders with a trusted Ticker Talker trading leader today.